Palantir is making new lows. Hello fellow investors, in our very first Palantir video about 8 months ago, we've established that the multiples we're paying for Palantir should be around 15 to 25. That's the margins or multiples we've come up with after analyzing the components of their revenues. If you're smart enough, you'd pay 15 and below. If you're a FOMO type of investor, you'd pay 15 and above. Up to this day, I still value Palantir with the same margins, 15 to 25, even with their incoherent financials. To be honest, at 15 multiple, with these numbers, we're still paying rich for the stock. Not to mention when we use the highest band of their margins, or multiple of 25. If you're confused, 1% margin is the same with multiple of 1 or 1 multiple. If your Palantir pumpers assume 25 to 35 margins or multiples like this one, never listen to these people again. Please. This is not investing, this is wishful thinking. That's all I have to say about them. I need not to mention them, you know who they are. Anyway, I think I found a better way to value Palantir. In my previous video, I gave you this range, $2.52 to $5.69. $2.52 being my allowable price of free cash flow of 20 and $5.69 being my allowable PB of 5. If I'm being honest, I'm uncomfortable valuing tech companies with their PBs, especially those companies not known by an average person or an average investor. For tech stocks, I always value them using the PE and price of free cash flow, not really the PBs. Anyway, I made it clear then that at 5 PB, the stock was still expensive, and I was very clear that I'd only trade this stock within this range. To be clear, at $5.69, the stock is still expensive because $2.52 here is my allowable price of free cash flow of 20. The stock never reached those price targets anyway, so we'll just move on. I can't pull up my valuation summary on this stock like the usual, only because there's not much information about this stock. But here's Palantir's charts along with their fundamentals for each quarter. This is already adjusted with their diluted shares reported quarterly. The black lines here are my fair values for each quarter along with their market cap, just to have that context if the stock were to trade at those prices. Revenue is increasing, free cash flow is decreasing, while equity is about flat. This is how much investors paid for the stock in terms of PE, price of free cash flow, and PBs. Those are the highs and lows of the quarters. Obviously, the higher the number on these fundamentals are, the more expensive they paid for the stock. You can see that these numbers dramatically decreased over time. For 4 quarters, Palantir is at negative net income, negative EPS, so I didn't include the PEs. You could see that even with the stock fallen this much already, the price of free cash flow multiple is still very rich. Now, is that a growth multiple, moat multiple? I don't know. All I know, the stock is still expensive. Now, let's talk about my fair values. It hasn't been moving much. It's been hovering at this prices, $2 to $3. This fair value is important and very telling. If you could just follow the cursor, look at the stock price movement relative to my fair value. It's almost the same. Now, how did I come up with this fair value? You have to remember the 15, the lowest band of their margins. Normally, I'd use that as PE, then I'd multiply that by the EPS. In this case, the EPS is not very useful, so instead, we'll use the free cash flow per share. I'd just multiply this free cash flow per share, trailing 12 months by 15, and that's our fair value for the quarter. I'd recommend you only buy below these fair values. If you want to use 25, the highest band of their margins, you can use 25. It's all up to you, your risk and return requirements. Again, I only want to use the lowest margin of 15 for my margin of safety and a good position for a higher return. Also, that's what their financials suggest. They're not even reporting a margin higher than 15. So I think using 15 would just be fair, maybe even overpaying a bit. Now, don't get too bearish on this fair value because this is not accounting for both growth and share dilution. This fair value is only good for the quarter, and it could go higher, as should for growing companies with very outstanding numbers. But it could also go lower, as the rate of share dilution overshadows the company's performance. Also, their financials could just be naturally terrible. I don't see Palantir buying back shares anytime soon, so the dilution I assume will stay as it is. This price level is simply the price where Palantir could be getting interesting for me to buy and hold for long term. This is why I also pulled the market cap on these fair value prices, so it will be open for discussion. One could argue, is Palantir a $3 billion company? I mean, sure, that's what their current financials are telling me. But it really depends on how you approach the stock. Should you pay premium or not? Sure, but me, I don't pay premium. I don't pay for growth. Growth is speculative. I don't forecast things. I buy stocks based on the numbers they put out every quarter. I only react to their financials. I mean, we have Google stock with growing revenues, but it's now trading below my fair values. Why is that? Well, we have the earnings recession, the margins compression, and the tightening consumer spending. All these things analysts are forecasting in the coming years. And that's why overvalued risk assets with high multiples are the ones most likely to feel the price compression. If you've been DCAing Palantir above these fair values, I could tell that you've been buying the stock expensive all this time. If you want to DCA Palantir, you only do it heavily below these fair values. If Palantir should fall back down to fair values, I would expect a price around $2 to $3, at least for this quarter. Again, I only react to their financials. I can't tell anything about the future. At that price, I'd review my thesis, and yeah, I'm now open to the idea of Palantir being a $3 stock, maybe even 2. That's how you kill a good company with share dilution.